You know, one of the things that we've seen in terms of the rally from emerging markets is that if you look at the monetary policy that we're seeing from various EM countries, they're going in all sorts of different directions. Some at this moment, despite the fact that we've got tightening policy from the Fed, some are also tightening, some are actually loosening. Do you think we overestimate the importance of US monetary policy on emerging markets now, and can it remain so throughout this period of tightening from the United States?
I think it's been very overestimated. And if you look at the years, 3 years before January of last year, emerging markets were underperforming. And everybody said, oh, it's because the Fed is going to raise rates and everybody's afraid. But if you look at the correlation between the Fed rate and the emerging markets index, there's no correlation. Sometimes the Fed rate goes up and the market goes up. So I think people have got to focus on different things. And by the way, it's really interesting to note, you take Brazil now, interest rates 14% for companies, going down while the Fed raises. So you're going to see these discrepancies in the different markets.
Well, and that's happening here in the U.S. as well.
Exactly.
I want to ask you about valuations as well, because we have seen, despite the Fed raising rates, that the MSCI Emerging Market Index has continued to go higher. And I have a chart here on the Bloomberg that's looking at the forward price to earnings ratio of the MSCI Emerging Markets as a ratio to the MSCI World Index. The blue line here is the average, so we're below the average over the past 5 years. Does that mean that we're seeing some attractive valuations there?
Definitely. We're roughly about 20% cheaper. If you look at PE, price to book, earnings growth, by the way, is better in the emerging markets because emerging markets on the average are growing at 4%. Places like China and India are growing at 6–7%. So definitely the valuations are good. But you've got to be careful there because a lot of these valuations in China now have changed in the sense that the tech companies, the internet companies, have now taken a much larger share of the market. And these companies tend to have higher PE ratios.
So they're inflating the overall number, perhaps.
Exactly. But still, even with that, it's lower overall.